$500,000 from their stock, that he invests all that money into stock market. He made a good money. He bought our parents, car, a Cadillac, pay cash, because we were all making great money. Then when the stock market crashed, his stock become nothing. Then what happened? He still owed $300,000 to IRS because he didn't pay the tax. He thought we were gonna pay later, but now he has nothing to pay tax, so he owed $300,000 to IRS, and I think IRS is still deducting 25% of his pay check every month. Even though we owe money to IRS, IRS cannot take all the money from our check in this country. The maximum they can take is only 25%. Why? Because we still have to survive. So that's good law. And he survived with the 75% of his check. Okay. So insider trading, that's no, but the problem with this stock market is, all these are regulation, but under the book we're supposed not to do that, but everybody does play little games because nobody can catch. Well, on page 15 we covered the duties already. Let's go to page 19. Now, if, let's say, Fording Corporation coming into Virginia, they have two ways of operating corporation. Now, let's say Samsung. Samsung wants to open business in Virginia, then they have two choices. One is they can register as Fording Corporation. So they can register as Fording Corporation in Virginia. They still need to register as Fording Corporation. Or number two is they form new corporation, and Samsung can be still shareholder of that new corporation. So it all depends on the tax matter and all that. Each company will decide which form they want to operate. Okay, there's the another handout that I gave you, this one. It's a foreign exchange exemption. It's not there. It's this one. You know what? That's the one. That's the one. Now, for corporation, we cover how to register. We talk about shareholders, board of director, officers, and their duty. And we talk about a little bit of insider trading, trading and all that. Now at the beginning of where we said there in the if somebody wants to sell the stock to public, they have to register to SEC. But then we said there are exemptions. Now, among many lawsuits I have seen, especially the Korean, when Koreans do business, they are ignorant of this registration requirement. So let's say, Todai. Anybody go to Todai? That's a sushi buffet restaurant. It's in some big mall. I think it's in Fairfax, some mall or something. Like Todai is a Japanese sushi restaurant. Buffet means everybody, people can go there, bring their dishes. And there was another similar to Todai, another restaurant. What was the name? So Todai is operated as a franchise. The Todai is an independently owned franchise. Each location owned by different owner. There was another restaurant in the California. I don't think they didn't branch out to East Coast. What was the name? Anyway, let's say this restaurant, and they didn't franchise out, but what they did was they sold their stock to investors. So investors invest into this, I think that was Onami or something. This corporation name, then this Onami will branch out into different malls. So there are money is coming from shareholders, and Nami is, operating restaurant. So when people was making enough money, it was okay. But when Onami actually didn't pay enough return to shareholder, they begin to file a lawsuit to each other. The corporation founder and shareholder. The problem with the shareholders was that this corporation did not follow any SEC regulation. Koreans were ignorant that they had to file for SEC regulation, so they thought they didn't have to do anything. When legally problem came, then basically shareholders were filing a lawsuit against Onami operator, saying, hey, you guys didn't register the stock, and your selling stock itself was illegal. So that becomes sensitive issue when it comes to lawsuit. So if we take a look at, let's take a look at the first page. First page is saying not everybody has to register. Now, for this one, if I don't think in our exam we're going to go into a lot of detail, but just for your information. So normally, it said basically under the Regulation A, there is a Regulation A and Regulation D. On Regulation A, if it's less than $5 million, in 12 months, basically, the company only need to, they don't have to submit all full document. They only need to basically submit basically so-called simplified filing. Simplified filing maybe is the documents that they have to submit to SEC is much more simple than normal filing. Now, it says basically notice filed with SEC. Notice filed means they don't have to file full financial statement, audited financial statement, and basically the documents they have to file to SEC can be just notification to SEC. This is what we are doing. And the number 2 is that offering circular. Number 9, just typo. They just need to file offering circular rather than time-consuming prospectus provide to offeree. Means offering circular is much more simple version of catalog rather than full custom consumer prospectus. So if somebody is issuing less than $5 million, want to raise less than $5 million, they don't have to file full filing to SEC. Then under the exemption, then this SEC has regulation D exemption, and under the the regulation D exemption, they have like 3 different category of the exemption. Number 1 is rule so-called 504 says issue $1 million in 12 months to pay. Issue $1 million in 12 months. So if they basically want to raise only $1 million in a year to raise seed money, capital money, that is exempt. So this is $1 million. Under 505 said raise $5 million in 12 months, and said only 35 unaccredited investors, limited accredited investors. Now here, the terminology here, when they say accredited investors and unaccredited investor mean accredited investors are, these are basically professionals. Professionals such as banks and investment bankers. So if they are selling to professionals in the industry who have enough experience and knowledge, then basically they can sell to them up to 5 million. But if they are selling to unaccredited investor, means this is basically regular person who don't have enough experience. Then basically they can only limit that to 35 unaccredited investors. And at the bottom, number 3, B3 said 2-year holding period requirement means basically person who bought the stock needs to hold the stock for more than 2 years. And number 5, it says the require audited financial statement for unaccredited investors. Because these people are not professional in the industry, they have to have an accurate financial statement. And section 506. Now this is called private investment, private placement, basically up to 5 million. Private placement is they are only offering to the not to regular people, but to basically special investment companies who are professionals. So if you look at the page on the back of the page, That's the summary chart. Basically, it's exemption under 504, 505, and 506. And first one is type, is basically 504, limit is 1 million, 505 is 5 million, rule 506. I'm sorry, yeah, there is no dollar amount limitation there, unlimited amount, because they are selling it to investment companies only. So it all depends on, at the beginning, are they offering that to professionals or regular people? And basically, limitation of number of purchaser. Here they have a limitation 35 to unaccredited investors. Now, on the right side, there's like banks, insurance company, high net worth individual more than $1 million. That is a definition of accredited investor. Accredited investor definition is organization like bank, insurance company, high net worth individual, whose net worth is 1 million or whose net income is $200,000 per year. We call them accredited investors. Anyway, I think basically, I mean, you don't have to remember this section, but I just wanted you to get basic idea that SEC require registration, but there are certain exemption under this category, and people can sell their stock without registration if they are selling into these three categories. If not, they have to register for SEC. Okay? We don't want to go any further than that. Let's take a break. Well, let's come back at